actually record the call as I kind of go over and explain to you the signals, what's going on, all that.
Yeah,
Okay. Sweet.
absolutely.
Sweet. So this was actually an intro class that I ended up giving to G Portal NFT. And actually, you can't see my screen right now, so let me share. Alrighty. You're able to see my screen?
Loading. Yes, I can see that. Yes.
Okay. So, like I said, this was a class that I gave to G Portal NFT. G Portal NFT is going to be run by G Money, and it's based on an NFT group actually. So they do a lot of like little announcements for white lists that are coming out and little collaborations they have going on. You recently added me as what's known as a provider. So a provider is going to be somebody who uh, educates or gives plays on different trades to make. And you can see he's got a lot in the crypto space.
Mm,
These guys are going to tell you when to enter and how much leverage to use and stuff like that. I tried it myself. It's definitely complicated and definitely illegal for people in the U.S. But he's got a lot of people that are outside of the country that are able to follow these plays. And there are smaller
mm,
sites that you can use here in the U.S. that aren't following the law, but they're able to get away with it right now. So it is possible to do it. But again, I provide options, signals, and what I do is I just have an algorithm that I programmed and created that gives me buys and sells on particular stocks that I can then make option trades on.
mm.
So I'm providing those in his group currently. And in this group that you're a part of, I'm going to provide even more signals. So we're just getting started. I just created this last week. But for you, let's get started with the presentation because I know you're completely new to this. Haven't really traded too much options, if any, before. Only stocks.
Never.
Never traded options. Okay. Sweet, sweet. This is what this is for. So, points of discussion. Kind of want to give a little short back history into myself. This will be relevant to you, even though you saw the I am Rob channel in Discord. We're gonna
Yeah,
go into
I went
stock.
through that already.
Oh, you went through that already? Okay. There are just some things I want to highlight for you then. And then we'll take a look at stocks and options, like the basics, how to read the signals, and what to expect from the group.
Mm-hmm.
So, basic timeline. Yeah, I started in 2014, and my first option trade, I turned $10 into 150, and I actually have the screenshots right here. Let me see if I can zoom in a little bit.
Is this from the video that you had posted on your YouTube channel?
I don't think I actually showed the screenshots on those.
You did have the screenshots. Actually, I think you did discuss it. It's just that it was very zoomed out, so I couldn't see
Okay.
everything.
Well, yeah, this was the first option trade you can see in 2018. Didn't really know what the heck I was doing. The feature just came out to Robinhood, and so I just put in, for 5 contracts that ended up being $10. And you can see I sold 4 of them for 148, and I held on to the last one just to see what it would do. So
Mm,
that was my like intro into options. Of course, I'll get into all this later in the presentation. However, one thing that I really want to bring to your attention and something that I told them is one of the stocks, not options, one of the stocks that I bought was this ticker Invax, a company called Novavax. They're a medical company. I bought I bought shares of the company for $1.29, and so you can actually see here the price that I bought the stock at and the quantity of the stock that I bought at this price. So 725 shares at the price of 129 was worth $945, and I ended up selling that same day for a little profit of $30, right?
all right.
Fast forward 3 years later, this was in 2018. Fast forward 3 years later, and we can actually see that the stock reached a peak of $290.18. So right now it's at $16.51. So it fell from that high. But let's do the calculation. If I had 725 shares And like I said, we'll get into all this later on in the presentation. But essentially, I just had 725 of shares at $1.29. We do the calculation. 725 shares times the price of $2.90 is this number. So in 3 years, $945 became, or would have become, $210,000.
Wow.
Let that soak in. So it's not just options that we can have a lot of success with. It's actually stocks that you can have a lot of success with as well. And I'm actually, some of the indicators that I'm working with are pretty good at finding those points for long-term trades. I'm working on it. It's still a work in progress. I would show you how it looks. Maybe I can actually do that another time. But yeah, the signal that I'm looking at, I think it will be good for this. So that's just something I wanted to bring attention to. And of course, I started using these indicators in 2022. This was like the culmination of all my experience trading stocks and then also options and putting it together into these indicators that I worked on. So your trading experience, you've got no options trading experience, but you do have stock trading experience, and you're currently living in the U.S.
Basic buy and sell. Basic BS.
Yep. That can be the most fruitful if you know what you're doing. So first off, what are stocks? So stock is going to be a type of investment that's going to give the stockholders or shareholders a share of ownership in a company. So giving you or I ownership in a company. And companies do this in order to raise capital from investors. As we give them money for shares of the company, they actually are able to use that money to then invest and expand their business operations. Okay? And tickers, all they are unique identifiers for stocks. Because if we actually go to Robinhood, let's say we type in Apple, you'll see that there's another company called Apple, right? But we had to have a way to identify them beyond just being Apple. So you can see the Apple that everybody knows is the AAPL, and then this other Apple is APLE. You got me?
Yes. All right.
So
I believe that you did show this presentation in your YouTube video that you had uploaded.
Yep. Some of it was
very straightforward.
Oh yeah. This.
I also did a little supplemental digging to really get some of the terminology down. I'll have to share that glossary with you, which I shall do in a moment. Actually.
Sweet deal. Yeah, this was a very great presentation. And so we have Apple at AAPL. This is the ticker for Tesla, Nvidia, and Meta. Okay, so now that we got a solid foundation of what stocks are, we got options. Options are what's known as a derivative security. So don't get too scared about the word derivative. All it means is that it's tied to something else. It's linked to something else. And in this case, it's going to be stocks. So options are an investment or security that is tied to stocks. All right. And specifically, options are contracts that give buyers the right but not the obligation to buy or sell a stock at a certain price known as a strike price. So here, that might confuse you a little bit because it confused me when I first looked at it, right? So if we go back to... Say again?
I love the demonstration coming up because that's always been the challenge part. Like, I have to see this practically.
Yes. So when we say the right but not the obligation, why we use options is, let's say we thought that there was a potential the price of Apple could drop, and maybe we had some shares of Apple stock. What we could do is we could buy an option for the 135 strike price. And you can see the strike price identified by the columns. So this is the strike price, and these are the actual prices of the option contracts. So let's say we thought that Apple had the potential to go down. We could end up buying this strike at 135. Now let's say Apple drops down $10. So instead of being $135.56 per share, it was $125 per share. Okay? Imagine that happens, right? Well, guess what? We don't have to sell at 125. We actually get to sell at this 135 strike price. You get me? You follow me so far?
So far, yes.
So it gives us the right, but not the obligation. We don't have to execute at the 135 price if we don't want to, but it gives us the option. Likewise, let's say it goes up. We think that the price is going to go up, and we want to be able to, buy in at, a lower price. So, we could buy the 137 call, for instance. 137 strike. And let's say the price of Apple goes up $10. We wouldn't have to buy at the price of Apple being up $10. We could actually buy at this 137 strike price. So that's why people would use options. It's to sort of hedge against different movements in stocks.
I see. Now, when you say call and put, what is the difference between those two? That's where my confusion was. I know that that's specifically for options. Is that correct?
Excellent. Yes. Excellent question. So that was actually what we were going to get into next. So calls, we make calls when we want to go long on a stock and believe the price will go up. And we make puts when we want to short a stock and believe the price will go down. So if we go back to Robinhood here, let me go ahead and put this in another tab so we can just move to the side. Okay, cool. So when we go to Robinhood here, you can actually see we have buy, sell option, and we actually have call and put. So again, our calls, we believe the price is going to go up. Our puts, we think the price is going to go down. And that can be further shown here if we go to this options builder button. It'll show you sort of the different strategies you can make with calls and puts. This is getting into more complex ways of using options. So for now, we're just focused on like single leg options, they call them. But we won't get too deeply into that because, again, just to show you that long is calls and going short is going to be your puts. So long or calls, we think it's going to go up. Short or puts, we think it's going to go down. Okay. Now, each contract represents 100 shares of an underlying stock. Now, I know you're like, oh, why is that? What does that mean? Well, when we go to our options, you'll see what I referred to earlier as the options price. You see that here? These are the options prices, right?
Yes.
So when you look at this option price, what does this say to you?
$1.02.
Okay. And remember what I just said about each contract being worth 100 shares, right?
Yes.
So notice how when we look to buy one contract at 100 shares each, the price is not $1.02. It's actually $100, $102.
That adds up mathematically.
Okay. Each contract worth 100 shares. Got it. All right. Now, we don't own 100 shares of the stock we are purchasing, and for that reason, our options are uncovered. If we did have 100 shares of those stocks, they would be covered. And that goes back to what I was saying earlier. If we had 100 shares of Apple and we thought the price was going to go down, we wouldn't have to sell at whatever price, Apple went down at. We could actually sell for 135 while still maintaining our position in case it keeps going up. So the reason why you would do an option versus just like sell it as it starts to go down is you still want to protect against the potential of it going up. So if it goes up and you've sold out at some lower price, you potentially missed out on selling it at a higher price. Does that make sense, or do I need to clarify that?
Could you explain that one more time?
Yeah.
Exactly. So I understand the aspect of the contracts, it being multiplied by the amount of each individual stock. But however, you said we don't own the stocks. So exactly how does that benefit us in this way is really what I'm trying to understand.
Okay.
Where does the benefit come in taking this route?
Yeah, so we are trading uncovered options. And essentially what that means is we just don't own the actual stock. So you don't think of these as stocks. These are options contracts. We're trading the price change in the options contracts. Now, one way to think about options contracts, and I've heard this analogy a lot, is comparing it to insurance. So we're buying insurance to protect against something happening. Something happening that's not in our favor. Or in our case, we're simply just we're trading for insurance at a better price, if that makes sense.
Yeah.
So we just want to see our insurance go up and our insurance be worth more, so we can sell it. And that's shown here through the price. Okay, so we're not trading the stocks with options. We're just trading the options contracts that are linked to the stocks.
Okay.
And that's shown here through the prices of the options contracts. Okay.
Okay, I understand that.
Cool. And that's this last sentence here. We're solely trading the contracts. All right. So, like with our insurance example, there's, time plays a factor. And in this case, time decay plays a very big role in options. So as we move closer to expiration, the value of the option price is naturally going to decline. So what this can mean is even if the stock goes in the direction that we want, we can still lose money because of this thing called time decay. Now, let's actually see this in action. I want you to take a look at the 136 strike price. Can you tell me what the price of the option is worth?
Yes, $1.02.
Yes. Or $102, right?
Yeah. Yes.
Now, let's go take a look at the December 30th expiration. What's that 136 strike price worth?
$2.15, so $215.
Okay. And let's go out to January 20th. Now what's it worth?
At $4.88.
Okay. So you notice the trend?
Yes.
The further out in time we go, the more expensive our options are going to be. All right. So likewise, the closer to expiration that we are, the more riskier it's going to be. Right?
Absolutely.
Okay. So that brings us to being in and out of the money. So part of the reason for this time decay is being in or out of the money. So this ties back into what we were talking about, how if the price drops $10 and we have a put on Apple and we did have the shares we wanted to execute, we would be able to sell at this 135 price. That has to deal with being in the money. So what in the money means?
I would assume that's a price that's higher than what you invested for. You're getting some profit.
Essentially correct. For calls, like you said, it's going to be any something that's in the money is going to be anything that's under the share price. So they're going to consider all this in here in the money.
Okay.
Something that's out of the money is going to be outside of the share price. It's going to be further out because for calls, we want the price to go up. Right? So anything that's above our share price is going to be out of the money. Anything that's within our share price is going to be in the money. So for puts, how do you think it's going to be? What's in the money? What's out of the money?
I would assume it's above.
Above is what?
Above, what is it, 136?
Is going to be what?
Um,
In the money or out of the money?
well, that would be in the money for a put, then, right?
Correct. Correct. Absolutely. For a put, it's in the money is going to be anything that's above the share price. And out of the money is going to be anything that's below the share price because we want the price to go down. So it's the exact opposite as it is for calls. Okay? Why this is important is going back to that example of a put at 135. All right, let's say instead of moving down $10, this ends up moving it ends up higher than 10, or it ends up at 145. So instead of going to 125, it goes to 145, and we bought the 135 strike. Who in their right mind is going to allow us? Who in the right mind is going to buy our 135 price when the price is at 145?
Nobody would.
Nobody would, because you'd be losing money, right? Because you wouldn't want to buy or sell, or you wouldn't want to buy this 135 price if it's at 145, because you'd be missing out on that $10.
Of course.
So it's for that reason that anything that's out of the money at expiration, so that's literally expiration. You can see here December 23rd. So at 4 p.m., 3:59, anything that's out of the money is going to expire worthless. It's literally going to go to zero because nobody's going to pay for that price if the stock is not at that price.
Okay.
So time decay plays a role in that. Anything that's out of the money, so in this case, for the put, if let's say it closed at this price on Friday, all these would be worth zero. The in the money options would be worth something.
Okay. Understood.
Okay. All right, and something that's just good to know, but won't really play too big of a role in the signals that I'll be providing are going to be implied volatility. And implied volatility is just going to give you a sense of the cheaper options versus the more expensive ones. The cheaper options are going to have less volatility. The expensive ones are going to have a high volatility. Okay, and that can be directly seen here. If we go to our 136 call and we check implied volatility, you can see this is going to be 33%. Okay, this is expiring on the 23rd. Now, if we go out to the 30th and we check the implied volatility on the 136 call, it's going to be 28. The next thing I want to go over is option Greeks. So if you've been following so far, you're probably looking at it like, okay, so we have the options here, but how do I know how much it's going to go up given the movement of a stock and given into account our time decay? Like, how do I know how much an option price is going to be given time decay? That's probably what you're wondering right now, right?
Yeah.
All right, that's going to be determined through the Greeks. So likewise, when we go to our option for the 136 strike, you're going to see this section here called the Greeks. And you can actually see the ones that we're going to be focusing on are going to be delta, gamma, and theta. So what delta is going to tell us is for every dollar the stock moves up, this is how much our option price is going to go up. So if we look at the 102 price, if Apple, which is now at 135.57, if that moves up $1 and it becomes 136.57, we can expect that this option price, if we add this delta, that will be our new option price.
Okay.
So in other words, this goes to 136.57, add 43.73 to 102. All right. Gamma
Okay.
is going to tell us, okay, for each dollar that it goes up, this is how much we add on to delta. So this is going to be like the rate of change for delta as we move up.
Okay.
So you can essentially go ahead and add this extra 0.123 to the delta
Okay.
for when it goes up. But, you know, for the most part, you can just kind of look at the delta and get a pretty good sense of where it's going to go. Okay. And then the last one that I really want to focus on is theta. Theta is going to tell you each day how much the option price is going to go down in value. So each day,
Okay.
if this was to remain flat, if the price didn't move 1 cent, this would be 34 cents less the following day.
Okay.
So if the stock stays flat, this goes from 102 to like 66 or something like that. 68.
Okay.
All right. And certainly when we go to December 30th, you'll see the theta get smaller and smaller. And that's because the time decay is going to be less the further we go out. So you see, by the time we get out to January 20th, it's only 9 cents. You know, of course, our option price is increasing. If we go out to March, they don't even have the 136 strike. Okay, we got out to January. We see that's even less than the 9%. It's at 8. So there's going to be less time decay the further we go out. And those are the Greeks. So that's very important. That's how you can determine how much an option price is going to go up given movement.
Okay.
All right, that was actually our stocks and options intro. So before moving on, were there any questions that you had related to stocks, options, the whole bit?
I guess really the thing that I'm curious about is how is this AI putting all this information together in order to create these ticker.
Oh, to create the signals? My signals take into account a lot of different factors as far as technical analysis and determines entry points based on tests that I've run and in other words called back tests that I've run on these strategies. So basically over a period of time, I tested the signals based on technical indicators and I was able to fine tune it in order to get results that I wanted to see. So for instance, you're able to see here that I've got a 75% win rate on this particular strategy. And that win rate is reflective of the back tests that I ran. So tests that I ran in the past. So it's important to realize that these win rates are not necessarily indicative of how future results will be. So just because this has 73% win rate in back testing doesn't mean that it'll have a 73% win rate in the future. Why? Because we can't account for the future movements. But this will at least give us a good indication of what we think this strategy is going to do. Oh, lost you there for a little bit. Did you catch that?
Can you hear me?
Yes.
Yes. Sorry, computer died. Forgot to plug that back in.
Yeah. You're good. Where did I drop off at?
Yes, I was wanting to inquire about the AI that you are utilizing. I'm assuming that you using the Greeks, as you stated before, pretty much integral to the AI being able to figure out what changes may be made, or at least the probability of the change to be significant. I'm guessing. I'm not sure if that's clear.
So AI is not what I'm using. I actually program these as algorithms or strategies given different indicators that I used. These could be technical indicators from RSI, relative strength index, or EMAs like exponential moving averages. These are strategies that I use technical indicators in order to code.
Okay.
And these results, these win rates, are going to be conducted over what's called backtest. So backtests are going to be tests that were conducted in the past. So it might be from January 2021 to January 2022, and then I would catch, a win rate. In this particular case, it's going to be from 2021 to this last updated date that I back tested this. And so I'll try to keep those tests recent and and keep track of update the win rate accordingly. I'm actually hiring somebody right now on Fiverr to work on this sheet that's going to keep track of the back testing results and live testing results. So we'll be able to see how accurate that win rate is. But in my experience so far trading these, the win rates have been really accurate. So one of the big wins that I actually caught today in our group was off this NVIDIA play. I'll show you real quick before I get into how the signals work.
Absolutely. That's actually just the direction I wanted us to take. I'd seen it, and it looked like it was something interesting.
Yes. So all right. I think the best way to go about this, and of course, the trading platforms. I'm going to get interactive brokers for people that are overseas that are looking to get into trading U.S. stocks. The trading signals. Okay, so this is how you read the trading signals. First, you have the ticker. And this is, of course, going to take into account everything that we've talked about so far. First, you have the ticker. Also, the unique identifier. In this case, it's ADBE, which is going to be Adobe. So if we go to Robinhood and we go to Adobe, you're able to see our stock. Next, we have long entry triggered or short entry triggered. So long entry triggered is going to mean call. Short entry triggered is going to mean what? Correct.
I see.
So in this case, we have a long entry triggered at the price of $330.64. So that's letting us know at this price we had this signal generated. And the alert ID is going to help you distinguish against different strategies that have the same ticker. So I might have 5 different strategies for Adobe, and this is how you can kind of differentiate between them in case, multiple fire at once.
I see.
So alert ID is important. And next we have long entry strike. So what this is telling us is we want to enter a strike that's $5 out of the money at a minimum, up to $10 out of the money maximum. Now, this is going to take into account the implied volatility that I mentioned before and a bunch of different factors that is going to be to the trader's benefit based on my experience.
Okay.
So essentially, we got the Adobe signal triggered at 3:30, and we want to pick an entry that's $5 to $10 out of the money. So let's go over to Adobe. So we see that the price is currently at $341.40, and since we want to pick something that's $10 out of the money, we will go to this 342.5 strike, and we go $10 up, and then so we'd be looking at a strike here. Now, mind you, we got to keep into account expiration. So next you see the expiration says 2 dates out. Okay? So 2 dates out, the way I'm interpreting that is, okay, we've got 1 date, 2 dates. 23rd, 30th. So that's 30th is 2 dates out. So again, we go up $10. And this is actually my recommended price that we get in at if we had a long entry triggered. Okay. And then, of course, win rate is going to tell you in the back testing that I have that's typically going to be 6 months to a year out, up to 12/9/22. We have a 75% win rate on going long. And for shorts, we have an 87% win rate. So this is long entry. So, of course, we're going to look for the long entry strike. We're not going to look for the short entry strike. You follow?
Could you repeat that thing you said there?
Because we had a long entry triggered, we're not going to do a short entry strike. Right? We had a long entry triggered, so we're not going to do a short entry. We're going to do a long entry.
I understand.
Yeah. Now, if this was short entry triggered, we would look at the short entry strike and all this information. Okay.
Okay.
So we go back to Robinhood, and again, this would be our recommended strike price. Now, for our sake, we don't actually have to buy this. Okay? We can create what's called a watch list. So a watch list is going to allow us to track the price of an option without having to buy it. So you can see here, you see the option to add to watch list. Boom, I hit that, and now it's in my watch list. So now, when I go into here, I'm actually able to keep track of how that stock would have performed if I'd bought it.
Interesting.
So I add it to the watch list, and I'm just able to follow what the stock would do.
I see.
Now, don't mind all. I know there's some poor performing watch lists, but don't mind that, because not every time when I receive an exit do I just exit out of the watch list. I'll just post a screenshot of what it did. So don't mind these too much. But yeah, it's just a way for us to track the option without having to buy it. And so we can see what it would have done. That's it. We could see what it would have done. So it, of course, is a little bit different here on the computer than it is the phone, but you can actually go into your watch list, and like I said, you can see today's return is going to be 0% because we just got it and it's after hours. And if we go to another watch list that I've had for a while, you could actually see, oh, okay, today's return was going to be 11%. Awesome. So that's a way that we can kind of get in and get a feel for how the system works without necessarily placing the buys. All right. Now, with this in mind, I want you to keep in mind proper risk management. So I've lost hundreds of thousands of dollars. I know that you shouldn't risk more than 5% of your portfolio on any given trade. So what does that mean? If we had $100, we wouldn't want to risk more than $5 per trade. Not every option is going to be that cheap. I'm going to look to find many different options that have lower prices. Like, for instance, if we go to Snapchat, if we look for some of these options, and let's say we just went a couple weeks out, who couldn't afford, $9 for a option, or $4? That would be in people's price range. So I will look to create strategies for smaller stocks like this. as far as with the signals that we're having generated, you can expect that we'll have a few signals pop out every day. That's my goal, is to have a few different signals pop out every day. And I want signals popping out on a bunch of different stocks. So if we kind of go here and we look at today, what we saw, if we look at this one, it said SPY, we're going to long entry. Can you see the screen all right? I can zoom in a little bit.
I can see it just fine.
Oh, there's a command. Okay. All right. So you see here, we have the ticker SPY, long entry triggered at 383.38. Okay, it's got the alert ID of 17, and we can see that it's recommending that we do a strike that's no less than $2, but no greater than $4 out of the money. And actually here I specified an average hold time, which I'll kind of get feedback for and see if we want to keep. But it's going to tell you an average of how long we should expect to hold the option. And then you can see the expiration is going to be 3 dates out, and it's got a 75% win rate. And I created this strategy recently. So we had that long entry. Now we also so this is what I was talking about and why the alert IDs are important. So see, this is another long entry triggered at the same price, but a different alert ID. So it's two different strategies that happen to trigger at the same price. I've never actually seen this before. Actually, I've seen them trigger at the same time, but never at the same price. So this is pretty interesting. Or around the same time. Like maybe one's like 1 minute after or something like that.
Hey, maybe it's a sign.
Yeah, so this was like a double whammy here. So it kind of gave a lot of confidence. And this one happened to be an 87% win rate. So even higher than this one above. And sure enough, we got our long exits. Okay, maybe these are the same somehow, because there's no way they could have exited at the same time. I'm going to have to take a look at that. That's probably a glitch on my part. This looks like the same strategy. There's no way they could have had the same entry and exit. So this is likely a mistake on my end. I will fix, not to worry. But we would have ended in profit. So if you kind of want to see what the profit we would have made on this is it went up about $2. So if we go back to Robinhood, oh my gosh. All right. If we go back to Robinhood here and we go to SPY,
give me one moment. Yes, I have returned.
Okay, we're almost done. But I just wanted to show you what this play specifically did. So $2. So it told us to go up no more than $4. So if we go up $4, $4 from 387 is gonna be what? 391.
Yep.
So if it went up $2, we look at the delta, and we're going to say it's going to go up around 26 for every dollar. So times that by 2, we're going to be around like 52. So this 75 add 52 to it, and that would have been our profit on this particular trade. So just to show you what that looks like. So 75, we add 52 to that. What's that going to be? It's going to be...
How did you make that 52 again? I just wanted to make sure I'm following here.
Delta. I took the delta and the gamma. I added those to be around 26, maybe 27, but 26. And then I multiplied it by 2 because this is showing us for each dollar that goes up what it will do. And I'm so tired of moving from screen to screen. Let me have this here, and let me have this here. Okay. So you see how the price of this went up almost $2. So from 383 to 385.
Yeah.
So that's the reason why we take a look at this price and we say, okay, we got to take the delta and the gamma, and then we got to multiply that by 2.
I see.
And so that's, 26 round times 2. That's going to be 50, 52. And then add to that, I think it's going to be like 137. 137. So our $75 would have turned into 137.
I see. Very interesting. How did you find out this math here? I'm curious.
Well, it was a lot of research preparing for this class and providing signals to other people, because when you provide signals to other people, you want to know what you're talking about. And before, it was just me understanding how the price moves, but not really looking at things like the Greeks. And now, it was a good thing, because now it just provides me more information to look at when I'm trading. So that's the basic breakdown, man. I know it's been about 45, 50 minutes since we really started talking about this. But, yeah, any questions that you have, throw them at me. My goal is to at least have you be able to set up Watchlist when you see the indicators come in.
Yeah, absolutely. So so really the process is to take a look. Well, actually, I have to see if it's even enabled for me to trade options on Robinhood.
Yes, that's something that when you go to your account and you go to investing, you can actually enable options trading. I believe it's...
Let me see. Okay, investing. Okay.
There should be like a level that helps you. You kind of... I don't see it on my end. Do you see the option? It's like a account tier.
Account tier. I'm not seeing that. Let me take a look. I'm under the investing tab. Perhaps I just need to just show you, or is that wise to do?
Yeah, share your screen. Yes.
Yes.
Yep.
Oh.
You're okay with this part being on the live video on YouTube?
Just a basic trader. Nothing much interesting. Just a lot of failing stocks since I haven't really traded in a while.
Yeah, no, you're good. Okay. Go to you see the settings page link?
Yeah.
Click investing there. Yeah, I'll block that out. Don't worry about that.
Yeah.
Okay, get options trading. There you go.
I see. They hit it.
Yeah. Yeah, they want you to be a
I'm
student.
guessing there's probably a huge reason.
Nope. Nope. No.
I guess I'll just put I have.
Or
maybe I'm not sure. It'll give me a tutorial, perhaps.
No. Yeah, no, you don't. You're not sure how to enter a spread. A spread is different from what we've covered.
Yeah. So blah blah blah.
Don't worry, I'll block all that out.
Yeah. Cool.
Application approved.
Okay. Expiration date trading as well.
Uh, you're never gonna really be trading on expiration date. I say you can leave it. Not right now.
All
Trading on
right.
expiration date is the riskiest type of trading you can do. People do it, but it's like when you're like it's like when you're trying to win the lottery.
I
It
see. I
it has
see.
to it has to absolutely move in the direction that you specify, or you risk going to zero, especially if you're out of the money.
Oh wow, that's not good. That's actually terrible. Sounds like a terrible development.
But if you want, we can
Not a
go
good thing to
through.
lose.
If you want, we can go through. You can share your screen again. We can go through an example of how you would enter a watch list once you see the.
Yeah. So you said you wanted me to see the watch list. Is that correct?
Yeah. So let's go over an example.
Sounds like fun. I shall be sharing again. Give me a moment. Let's see. Yeah, I like title. Deal with it. Okay.
All right. So you have the Discord open in a tab.
And tab.
Yeah, you're gonna want to go to the Trading Signals channel.
Yeah. So.
You got notifications on that. You're gonna want all those notifications.
Yes. Let
Go to the
me.
notification,
Yeah.
all messages. There you go.
Awesome.
There you go.
I've been seeing that pop up a bit on my phone as
Okay.
I've continued my day.
Yeah, man. I won't spam you too much, and if you need to, you can always take it down a notch. But they're there because I'll be posting in
No, no,
success.
I don't mind. I like to have access to see everything. So, you know.
Up to you. Up to you. But yeah. So let's say you saw one of these long entries. I want to see you kind of go through the motions of what you would do.
Okay.
You can talk me through it as well.
Okay. Let's just take a look at the SPY ticker here. Actually, I wonder if I could do it this way. Yeah, that actually seems better. Okay. Right over here. Scroll this up. Okay. So I would type in the ticker. I don't even know what company this is. Interesting.
I don't think it's streaming on my side. I'm not able to see your entire screen.
Interesting. Because they paused it. Let me take a look. Oh, maybe I have to try using it this way. Okay, can you see?
Yes.
Okay, good. It may go in and out. I've noticed it happen on the stream for some reason. Anyway, so let's see if I can back it out a little bit. All right. Good view right here.
Yes.
So my next guess would be because I do have options trading information, I believe I would go down here to
Nope.
actually.
You clicked on something I never seen before.
Excuse me.
You clicked on something I never even seen before. You want to scroll over to the right. You see the trade SPY options. There you go.
Mm-hmm. Okay. Give me a second. So, based on what you've explained. Let me pull back up the. SPY it was? Yeah, right here. So long entry triggered for 383.38. So therefore, you would place a call on this one. Is that correct?
Yep.
And the call should be between $2 and $4. Is my understanding?
Yep. Out of the money.
So it's good to be out of the money when you're doing a call for this? Or I'm a little maybe I'm misunderstanding that part.
Yep. Long entry strike is just going to tell you $2 to $4 minimum, maximum out of the money we want to pick an option for.
Okay. Now for the expiration, I was wondering if you could clarify on when they say 3 dates, do they mean like what does 3 dates specifically mean? I didn't understand that part.
So if you go to expiring December 23rd, you see that expiration? You would count the dates out. So your first date would be the 23rd. Your second date would be the 27th. Your third date would be...
Okay.
The third...
Understanding that.
Can you complete the third date?
The third date would be the 29th. Is that correct?
28th.
Or the 28th.
28th.
28th, I see.
Yeah, you literally go 3 dates starting with your closest expiration.
Okay, I see. And when you say win rate, you mean the likelihood that will be successful?
So the win rate is going to show what the signal did in backtest. Because remember, we can't tell the future. We can run tests on what it would have done in the past. And then we can get live testing data, through these signals. So the signals that are showing in the Discord, we'll be able to count up that win rate there. And we'll be able to say, okay, this is how it did in live testing. And then this is what it did in back testing.
I sort of understand that more.
Yeah. So, yeah, if you could go through and get the watch list based off that signal, that would be great. Let me see you go through that.
Also, I applaud you for your patience.
No problem. This is content, baby. Free content. I'm putting this on YouTube.
Okay, so say for the share price is 386. Since we're doing long, we're hoping that it would end up going up. Actually, no, it being below price, correct?
Calls, we're looking for the price to go up.
We're looking for the price to go up. Okay, so you want something like, let me see, like above the line is my understanding.
Yep. Correct.
Okay. Oops. That's not 30. And as you said, $2 and $4, which I'm not really seeing any.
You're going to want to go $2 as in strike prices up.
I see what you mean. So 386 would have to be above 388, 340, in between there.
Yep. Assuming that the price it was at that price. Of course, this signal generated at 383. If you go back to the trading signal tab, you open that back up. or channel, just the channel. You have the tab right, but the channel. So it was actually triggered at 383, but for the sake of this, we'll just look at it as if it was 386. So you're right, you would go up $2, $2 to $4 up from, the price that it was triggered at. So a lot of times when you miss that trigger price, you just got to let it go.
Okay. Interesting. And for the average hold time, that's how long you hold it?
It's just going to tell you how long it was successful in back testing. It's not, it could be, to be honest with you, I've seen them say 2.5 hours, and sometimes it could be 3 days. So it gives you sort of an idea of when to expect a profitable trade. But it's not absolute.
Okay, I see. So I'll just
So go ahead and set up the watch list.
The video one, actually.
Go. Oh, okay. Yeah. Sure. That's fine.
I think I'll just give it another run through. So.
Perfect.
All right. So the trade and the video options on the right hand side. So this was triggered at 165. So they say we would have to be because it's a long entry. It's going to be a call. So therefore you add $2 or $4 to get the minimum.
Oh, why'd you say it was going to be a long entry strike?
Actually, no, it would have to be a short entry because that's what was triggered, actually.
Correct.
So, yes, correct. Thank you for correcting me.
Yep.
So since it's short entry, we want it to be a put. And set put, of course, we have this column here. That would be less than, basically minus $2 or minus $4. So that would be 163 to 161.
Yep, that's the range you could enter in.
1 date out. So 1 date out would just be the regular date that's already highlighted.
Correct. Yes, sir.
Okay. And there's 75% win rate as it's stated here. Okay.
So get the watch list.
Could you explain the alert ID in terms of what the most important understanding is?
So I could have another strategy that trades NVIDIA, and it might have the alert ID 19, right? So that's going to help you distinguish between the different alerts.
Ah, I see. So for this SPY, I see the alert is 17.
Versus 23.
Versus 23, I see.
So it helps you differentiate between the different ones.
17, 23. Okay.
Yep.
Interesting.
It's just an identifier for the strategy.
18. No, this is 18, so I'm guessing this is a different strategy.
Yep.
As well.
Yep.
I see.
So go ahead and get the watch list for that NVIDIA short.
Sure. So let's say if we were doing it based off this one right over here.
Yep.
It's -2, for example. So let's just say like 162 would be what we're looking at. So then you can just click on this to add to the watch list, or you could also just click right here. And I see the delta, gamma, theta, everything else.
You're gonna actually want to. Yeah, you're gonna actually want to add to watch list at the bottom there. On your phone, it's just a double click, but yeah, on here you gotta actually hit that. So hit that.
I see. Oh, I think he might already be on the watch list. Yeah, let's try it this way. Okay, that's weird.
Did you see a little pop up? The plus might add it to the watch list, but did you see a little pop up when you added it to the watch list on the bottom of your screen? I can't see the bottom of your screen.
I did not get a pop up at all. No.
All right, there should be a pop up that shows you, but go ahead to your home page. It's probably because you're zoomed in. You probably just couldn't see it. Scroll to the right. Scroll down. Your list. Can you shorten the list? Let's see.
Oh yeah, I have a couple that I had thought about.
Okay, yeah, that's a very good idea.
Just trying to look in different areas, kind of.
Yeah, it looks like the watch list wasn't created. Let's try it one more time.
Okay, so video. Since it was a short, it was a put.
And one date out. And so you're going for the 162.
See if I expand it this way, if it'll be different. Not doing so.
I would try to zoom out of your view. I think you're not able to see it because it's showing up at the bottom. Or zoom out, not in. Try to capture.
Out a good amount.
Okay, yeah, try that.
Yeah, it's not giving me the option to do so.
All right.
And I'll replicate that as well on the app.
All right, so if we go back to the put, and we were looking at the 162.5. You see how this pop-up came on mine? View watch list right here, where my mouse is.
Okay, I see.
You see it?
Yeah, I can see that.
No, you can probably see it better now. See that? So let me go back. So you see how it says remove from watch list?
Yes.
So I removed it.
Yeah.
And now I add it.
I see where the difference is there.
Yeah, so I don't, maybe your computer's bugging out, but yeah, essentially there's an add to watch list. You simply click that, and then you would be able to view on your list the option that you just added.
Actually, what's interesting is that apparently it will not allow me to add it onto my options watch list, which is quite interesting. Don't know exactly why, but it seems that is the case.
You want to try again?
Well, I'm doing it on the app actually, and it's still giving me a problem. Like, it's in the video.
Oh, on your phone? Double click the strike price. It should add it to the watch list.
Double click the strike price.
Yeah, double click a bar. And then the same pop-up will come saying it's added to a watch list.
What bar are you talking about? Not really seeing that.
So, can you see my screen?
Yes, can see that.
So, when we go back to NVIDIA, we go to our option. What I mean by double click is just hit this 2 times. This bar, strike price, whatever you want to claim it. Just double click that if you're on the app.
Okay. Let me see. This isn't not. I see custom price alerts. I go to the top to add to a list, and then there's a special option that says options watch list.
Yes.
And it says unable to save changes. Please try again. So.
Yeah.
What's going on here?
Yeah, I would reach out to Robinhood support. They have now 24-hour support, and I would tell them, hey, my computer and my phone is bugging out. Can you take a look at this for me? Just send in a little request. You go to account and then help. And then you can actually either call them or just send them a little message. They're very responsive, and just say, hey, I'm having some problems with the watch list. But it looks like you get the gist of what's going on with the watch list.
Absolutely.
All right. Well, I think this was a good little stream. I'm going to at least end the recording here. We can continue to talk afterwards. I want to thank you guys for watching. This has been Ignorant Trading, and I want to give a shout out to my buddy Jermaine. Thank you for joining me on this call.
Everyone on the Ignorant Trading. This guy got some bright ideas. There's definitely a direction on here. So definitely return and be here to really discuss what is it that you want to get out of this, and however willing you are. There's a lot to learn, so
More on the way.
doing that.
All right. All right. See you guys in the next video.